People assume that if the IRS takes their money, the payment plan must still be active. It doesn't work that way. That's not how the IRS operates. The IRS can take payments even if an agreement defaulted months ago. This is where most people will look at me and say, I didn't realize the payment plan could fail without them telling me it failed. Surprise! That's where most people say, I thought I was handling this right. I had a payment plan. Most people think that once they're on a payment plan with the IRS, their problem is solved. Nothing could be further from the truth. They think the IRS stops watching them, that they're protected. That's not really how it works. An IRS payment plan is not the finish line. It's a conditional agreement. And there are 3 conditions that need to be true. Those conditions, those 3 conditions, are what gets most people burned by the IRS. You see, when you set up an IRS payment plan, the IRS expects 3 things. You make the payment on time. You file your return on time all the time. And third, you pay the tax in full. If you miss any one of them, that will make the train go off the tracks. Quietly. Trains don't fall off the tracks quietly, but your plan falls off the tracks quietly. Most people don't get a phone call, a tap on the shoulder, a whisper, hey, you missed a payment. The IRS doesn't operate that way. There is no warning system, no early detection system. You just gotta keep track of your returns, your payments, and you make sure that they're all taken care of on time. So most people just keep on sending in payments. And then after a while, they might get another letter from the IRS. Hey, you've added to your tax liability. Meanwhile, their payment plan is broken. This is one of the most common situations I see. People come into me thinking, I was in a payment plan. Yeah, it was, past tense. You didn't keep up with it. Remember those 3 things. Pay on time, file your taxes all the time, and 3, make sure not to add to your tax liability. Someone will tell me, I've been on a payment plan for years. Then we take a closer look. We pull the transcripts. We see that they missed a return. They haven't paid a balance in full. They got a notice that they forgot about. The plan defaulted years ago. Now, the IRS kept taking the payments. You betcha. You're going to pay them money? They're going to throw it away? They're going to hang on to that. That's where the confusion starts, you see? IRS kept my money. I must be in a payment plan still, right? People assume that if the IRS takes their money, the payment plan must still be active. Doesn't work that way. That's not how the IRS operates. The IRS can take payments even if an agreement defaulted months ago. They're just going to apply the tax debt to where they see it best fit. Usually the oldest, highest earning tax debt, meaning all your other tax debt, gets more interest. Once a payment plan fails, enforcement can start. Wage garnishment, bank levies, liens against your property. These are enforcement tactics that the IRS is doing not to punish you. They want to get your attention. Hey, why don't you give the IRS a jingle? But they're not friendly like that. They're not Minnesota Nice or what Minnesota Nice used to be, often without much notice. That's why payment plans feel safe, right up until they don't. And you find out the hard way. Another issue with payment plans is how people set them up. A lot of DIYers will set up a payment plan based on what feels comfortable for them, rather than based on what their financials would show if they gave accurate financials to the IRS, which is how you should really set up a payment plan. That alone creates a very fragile payment plan. And it's an environment where things can fall apart really quickly. Any change in your income, you miss a filing, or you forget and you get a notice, don't respond to it, or you get an unexpected tax bill. That's how the whole thing collapses. And most people never know that it happens until the next letter arrives. Surprise! That's where most people say, I thought I was handling this right. I had a payment plan. Well, they were trying to. It doesn't take rocket science, but it takes persistence and diligence to make sure this thing doesn't fall off the tracks. You see, most people don't know the rules of engagement, the rules the IRS plays by. This is where most people will look at me and say, I didn't realize the payment plan could fail without them telling me it failed. Well, go figure. They're not in the job of helping you correct your tax problem. They're in the job of collecting tax. And if you're paying them, they're going to collect that tax. They're not going to let you know your payment plan broke unless they need to, which means usually you added to your tax liability, you forgot to file a tax return, or you didn't file your return on time and you got some penalties. And anytime you add to the tax liability and you're in a payment plan, that makes things explode. Kablooey. Now, if you're watching this and realizing this might be you, that's a good time to check in the description below or click here. I've got a link or a QR code. I can't remember which one. That'll take you to a screen where you can schedule a consultation to sit down with me. We'll discuss things, you'll get a little more clarity. I'll learn a little more about your tax situation to help you understand where things are at and how I might be able to help you. Here's the one part that nobody ever explains properly or very clearly. A payment plan does not stop the IRS from auditing your account. It doesn't stop the IRS from reviewing your account. It doesn't stop future offsets. It doesn't stop future enforcement action or collections activity on your account just because you're in a payment plan. It only works if those three conditions are met. You pay on time all the time, you file your taxes on time, and you do not add to your tax liability. Any one of those three get lost, it's going to fall off the tracks for sure. And remember, the IRS does not chase you down to remind you that you missed a payment. This is usually when people reach out to me and say, hey, what's going on? Because they're shocked their payment plan fell off the tracks. They thought their payment plan meant they were safe. What they really had was temporary protection. There is a right way to structure an IRS payment plan. It starts with understanding what the IRS expects and their actual rules of engagement, the rules that they play by. Payment plans can work, and they can work for you, not against you, but only when they're built on actual concrete financials, not just speculative guesswork, and when you monitor your financials over time. Otherwise, they're going to fall apart quietly. And the IRS only speaks up after your protection of being in a payment plan is gone. If this kind of an explanation feels good, sounds right for you, feel free to subscribe. I post videos like this every week, helping people understand how the IRS works behind the scenes and how to stop small problems from being big ones.